This is the active listings. This is the total number of inventory available, the gray line. So you can see that it's gone up and then it's sort of stabilized. And we're basically at a plateau. It should be going down at this time of the year. It probably will start going down, and that may be what this jump here is. And I've highlighted the active so you can see what we're talking about on each slide. Now we've moved on to the number of offers in the orange line, and you can see the orange line has been decreasing. The big takeaway here is it's been basically decreasing since about the first week in April, and normally it continues to go up or at least plateau through at least October. So the fact that we've been coming down is fairly significant. There was a little improvement in the month of July, but we're coming back down again. Now that we're into November, you're starting to see the end of the year slow down. So I'd expect that number to continue to go down. This is DUI. This is the ratio between the active listings and the number of offers accepted. So this to me is the single biggest key indicator. In this particular case, up and to the right is a slowing in the marketplace. It's the longer, and you read it all, this one you read off the left-hand axis. So your days of unsold inventory is somewhere around 54 days of unsold inventory right now. The other lines on here are still your active listings up here in the gray and the number of offers down here in the orange. The real takeaway is, again, basically sometime around April 1st, beginning of April, all the way through July 4th, the market really slowed down. And we were basically at a record pace down here around 15 days of unsold inventory, which is unheard of. And we slowed to about 55 days. 55 days is quite a bit slower than 15, which is why we're really seeing the slowdown in the marketplace. But to sell your entire inventory in 55 days in less than 2 months is still a fairly strong, in fact, what I call a balanced marketplace. The month of July, there was an improvement, a slowdown in the month of August and September. And now we're sort of at a plateau going forward since the beginning of October. This is the DUI for each of the 4 counties. Each county graph, when I bring that up this week, it appears that it did not get updated from last week. So this is only through the 29th of October. I apologize for that, but the trend is pretty much the same. This is so you can see the difference in the counties. Santa Clara County down here in the blue is doing the best with only about 45 days of unsold inventory, and Contra Costa County is doing the worst with about 62 days of unsold inventory. They're all following the very similar trend, and they're all pretty close together. In fact, they've been very close together. This is sort of the biggest separation they've had in recent past. Yes, there's some separation back here with San Mateo County doing the worst, the slowest, the highest number of DUI, and Contra Costa County doing the best. The trends are all the same. That's just so you can see that there is a slight difference between the different counties. Now we're moving over to overbidding. To get overbidding, you need the sale price. So this data lags behind by about 5 weeks. The magnitude of overbidding peaked right here and it depends on what county. You come back here to Santa Clara County, and it clearly peaked back in March. And then if you add in San Mateo County down here in the orange, it was sort of flat. When you combine the 2 counties, which is what my blended data, the peak was something like March 26th, if I remember correctly, which was actually after Santa Clara County had already peaked and was going down. Alameda County peaked in line with San Mateo County and a much higher number. And I think the reason for that, and you can see basically since the pandemic, Alameda County was doing better than the other 3 counties as far as the magnitude of overbidding. And I think that was people moving to more remote locations from bigger houses, more affordable areas in general. And Contra Costa County, surprisingly, was doing the least well out of them. It really did not benefit to the magnitude of the other 3 counties. So it's just interesting, which is one of the reasons I break things down differently, is if you just look at Bay Area data, you get a blended information, which really is not applicable to any given marketplace. This is the overbidding for each week. So you're looking at the distribution. You have a full year's worth of data. The dotted red line up at the top is the best week we ever had, which was just earlier this year, April 12th, 2022, and that's for all 4 counties. The worst we had is down here, November 30th of 2001, right after the World Trade Center. when I have the up hot improving marketplace and the blue decreasing marketplace both shown, the market's at a plateau, and you can see that the recent 8 weeks are these solid lines, and they're right on top of one another. You almost can't even see that they're all there. If you come up right here to the left axis, you can see that there are a bunch of lines there that then all merge together, and they're right on top of one another. So we've definitely plateaued as far as the overbidding. Then the dashed lines are the most recent, and you can see the market was decreasing through this period of time but slowing down. And then your dotted lines are to what are the oldest data and all near the top, and you can look at the individual weeks up here, and we'll go in more detail on these graphs later. Here's your sold price, and again with the county data, it's only going to be through October 29th, but you can come back, and the big takeaway is each one of your counties, the pricing currently is about where the pricing was in April of 2021, which is an unfortunate time frame because of the rapid increase on all these prices. It's pretty hard to do a market analysis. For Santa Clara County, I'd probably come back and look at what the prices were in 2021, and you're basically a little bit below that. I would do the same for Alameda County. Contra Costa County is right at what they were in 2021. And in San Mateo County, I might be inclined to come back here in 2020 and pick peak pricing, because what you're looking for is a period of time where the market can equalize a little bit so the sale prices are reflective of the market conditions instead of just flukes. When the prices are rising this rapidly, it's hard to determine what market value is. Here is the data broken down so you can get single family homes on the left for each of the counties: Santa Clara County, Alameda County, Contra Costa, San Mateo, and all four blended together. You're looking at the number of new listings. Santa Clara County saw an increase of 15%, which is in sharp contrast to Alameda County and San Mateo County that saw a 23 and 33% decrease in the number of new listings. In general, I'd expect the number of new listings on the market to be going down. I don't know if Santa Clara County had a surplus this week or a deficit last week. When you only have 2 data points, it's really hard to point the trend out. The inventory overall is basically going down a little bit, which is what we'd expect. They're closer together on here, -5% for the 4 counties combined, with a range of -2 to -8%. That's actually 9%. Then the number of offers accepted, I'd also expect this to be going down, and it is. Look at this. Alameda County is up 21%, and San Mateo County is up 29%, and Contra Costa County and Santa Clara County are both down around 19%, 18 and 19% respectively. The overall market is basically flat. I don't have an explanation of why the counties that normally perform fairly well are so different, but that's one of the problems with looking at 1 week worth of data. You get a lot of fluctuation. That's why I'm a fan of the 5-week data. And if you come down here to the 5-week data, it's a lot better behaved. The market's down 2.3% this week over last week. Santa Clara County is down 5%. Alameda County is down 1.5%. Contra Costa County is down 2%, and San Mateo County is flat. And you can do the same over on the condos and townhouses. Then moving down to DUI, again, DUI went negative, which is a little surprising. And negative is an improving marketplace. But my general rule of thumb is you really pay attention if DUI is changing 5 days for every week. And here you're only changing 1.5 days for a week. So that's pretty flat. Alameda County improved by 4.4 days, and San Mateo County improved by 4.4, while your other 2 counties, Santa Clara and Contra Costa, basically were flat. Number of closings, and with closing data, you have a little more information. It's lagging behind, but you can look at the sale price to list price ratio. 42% of your sellers are getting more than their asking price. You can see it varies from a low of 35% in Contra Costa County to a high of 50% in Alameda County. So actually fairly close together. If you ignore Contra Costa, they're actually very close together. Then the magnitude of overbidding is basically right at 100%, whether you're looking at the average or the median, which is why I'm now looking at both. The average, I think, is more representative. The median is going to be at 100% a lot of the times. In fact, right now, 2 out of the counties are right at 100%, and overall, the market's at 100%, where the average overall is at 101.3%. And the reason for that is a surprising show here of 104.5%. And again, what I would suspect is, despite my efforts to catch errors, and I do catch several every single week, I would suspect that one slipped by, bringing up the average. And an error would be where someone reported the sold price to be $510 million instead of $510,000. And that would bring up, would say your sale price to list price ratio was 1,000. And if you're looking at somewhere around 400 properties, that brings you up about 2.5%. So I suspect that's what happened. That's what happened last week. I went back and corrected last week's data. I'll do the same thing for this week. Just to give people a reference on what we're looking at what I'm calling the Bay Area data. Single family homes is the focus. 4 counties being Santa Clara County, Alameda County, Contra Costa County, and San Mateo County. I'm using a 5-week period of time most of the time. Every once in a while, I throw in the 1-week period just so that you can see what the current trend is. And my reference years are 2014 through 2021. Ideally, I would like to have a 10-year reference period. I found that the data was very unreliable going back before 2014, and using the current year makes it a little bit more complicated. So we're at 8 years. I will probably update it when I get to 10 years. With that, we'll take any questions after I go over the URLs. The green is what I call my root URL. If you add in the year 2022, you get to the live presentation at 9 o'clock Saturday morning. If you add in H 2022 for the year, 11 for the month, and 05 for the date, you'll get the handout that was posted about 10 minutes before the hour. This is what you'd put in. So the green plus this, and to get any specific episode. With that, did I have anybody that had a question? Not seeing anyone unmute themselves. Now what we're doing is going back and looking at DUI based on the 5 weeks. And then what we're doing is comparing it to the black line, which is the median. If the current purple line was on the black line, you'd have a completely normal marketplace based on the last 8 years. So based on the last 8 years, you have something like 38, 37 days unsold inventory. Right now, you're up here at a little over 50. The blue is the second worst year we ever had, which turns out to be the 10th percentile, and the 90th percentile, which would have been the best year down here in the red. So you can see that you'd expect it to be between the blue and the red, and you'd expect it to be on the black. Instead, it's quite a bit above the blue. What's that saying? It's saying that we're having a very slow marketplace compared to what we normally have based on the last 8 years. Keep in mind, the past 8 years have been 8 strong years. So the fact that we're slower than that really doesn't matter. We've had days unsold inventory up at 120 and 300 days back many years ago, but we're nowhere near that level of slowness now. This is the delta DUI. This is where I take the DUI for the given week, which is a 5-week period of time, and I subtract off the median for that 8-year period of time. And if you were having a normal year, you'd be on the black horizontal line. You can see you're above the black horizontal line, which is a slower marketplace, because the higher the DUI, the longer it takes to sell the properties. This is looking for the 4 counties. And again, as I've already said, unfortunately, my individual counties, when you see all 4 counties like this, that data did not get updated by my macros for some reason, so I'll investigate. But for now, this is data through October 29th. There is really no big change that I'm aware of for the last week. Here's the number of offers on the percentile basis. So you'd expect to be up here on the black. The blue is the fewest number of offers accepted, and we're doing less than that. And to me, that's really the takeaway. You can see the change in the number of offers accepted here. Normally it's up here quite a bit higher, and it's normally flat in the April through October period, April through October, and April through October. So you can see it's normally flat. And here we were just falling through the floor. So the buyers went away much earlier than they normally go away, and they're staying away. And the lack of offers accepted is really what's driving the current marketplace. Here's the delta. You can see that down in the pandemic, we were almost off 1,000 offers. Now we're only off about 500, but we're back to being where we were at the beginning of July. So we wiped out the improvement in the month of July and most of September. And then we've been coming down basically since the middle of September, a little bit after Labor Day, all the way through now. Yes, there is a little bit of improvement now, but that's mostly, I believe, because normally this is the time of the year when offers go away. So if the buyers maintain their current level, this number will improve again a little bit. This is looking at the offers through October 29th for each of the 4 counties, and you can see the trend for all counties is the same. The reason San Mateo County is much lower is it simply doesn't have as many homes, and so since you don't have as many homes, don't have as much population, you're not going to have as many offers accepted. Here's a percentage. This is essentially market share. I don't know if this is valuable. Yeah, it was to some degree, because I saw this anomaly with Contra Costa County for 2 years, really not slowing down at the end of the year. My best explanation is, for whatever reason, the buyers in those communities, in that community, Contra Costa County, don't slow down as much as the other counties do for the end of the year holidays. You can see Santa Clara County came down the most at the end of the year, but they're very similar trends coming down in San Mateo County. Alameda County might have been more flat, and that would go along with Contra Costa. Contra Costa actually slowed down so little that it picked up market share. It went from basically somewhere right around 31-32% of the market up to 36% of the market. So I did learn that observation by doing that. This is the active inventory. We're back to percentile. So now your inventory is right where you'd expect it to be. So we don't have a surplus of inventory. We don't have a shortage of surplus. So what's basically happened with the buyers going away, the sellers sort of self-regulate, which is part of the reason I believe that the number of offers accepted is more important than the active inventory. Active inventory tends to be a more constant number than the number of offers accepted. So what's happening with your offers is more important. But again, the concept is the same. The blue line up here would be the most inventory you had, and the red would be the lowest inventory you'd have, and the black is the median, the expected inventory. Here's your delta inventory. So this is where you take the current active inventory and you subtract it from the median. And this data is through last night, midnight, because it's not the individual county data plotted. And you can see you're basically coming back up to the median. So we're having almost exactly the amount of inventory you'd expect to have. Here's the magnitude of overbidding broken down on a percentage basis. So what you do is you go to the blue lines on the outside. Those are basically my normalized minimums and maximums. I do that to get rid of those errors where someone entered in a sale price or a list price incorrectly by eliminating 2.5% of the marketplace, because it's going to be extremely rare that more than 2.5% of the agents made a mistake in entering the sale price. Then the gray lines coming in are the 10 percentile down here and the 90 percentile. So 80% of the homes sell between the gray lines. Then you have the quartile. So 50% of the homes sell between the light green lines. And then your solid line is your median. So you can see it's come down and gone right on 100%. And that's why I typically follow the dotted green line, because the average is going to fluctuate more than the median, and you're not going to get stuck at 100%. Now you can look at this and say you're stuck at a little bit over 100%. But if you look at that, there is a little bit of movement in those lines when you start looking at the tenths of a percentile level. This is the delta magnitude of overbidding. So you'd expect the overbidding to be right here on the black line. So earlier this year, you were having way more overbidding than you'd expect by about 6%. I don't remember all the numbers, but the best case was I think it was Alameda County, where you had 19% overbidding. Then overall counties, all 4 counties, which is what this is looking at, is less than that. It was probably about 15%. So here you're about 5.5% below that, or above the median. So the normal overbidding for that time of the year for the 4 counties would probably be somewhere around 10%. 100%. Now you can see the rapid drop off, a little bit of improvement. Now we're having a plateau. Because the number of sales have dropped off, I'd almost expect this to go down. But at the same time, sellers are starting to adjust their asking price, which decreases the overbidding. And in general, buyers tend to wait for sellers to reduce their price versus going in and making offers below asking price, which tends to keep the magnitude of overbidding very close to 100%. At least it keeps it hard from going below. Again, not to sound like a broken record, but with the 4-county data, this is only through October 29th. This is simply looking at the magnitude. So if sellers were getting what they're asking, they'd be on the black line. So that's happening in 3 out of the 4 counties, and Santa Clara County is a little bit below. This is the delta overbidding, so where I subtract off where you'd expect it to be. And again, you can see it turns out to be at this time of the year, you'd expect to be basically getting your asking price. So the 3 counties are right about where you'd expect them to be. Santa Clara County is a little bit below. And this is not subtracting off the individual county. This is subtracting off the 4-county area median. In other words, what this does is it tries to find the areas that are doing the best. And, you can see Alameda County in the dark orange right here just before going into the black line, and you can see it pop up just underneath my red dot, which sends that's doing the best. Santa Clara County is doing the worst. This now is going to get into the overbidding, and we'll go into a little bit of a movie. Basically, the line that's being added is the line to the left of the purple, and I've boxed it in green. I think I've got them all in the right spot. This is where we are right now, November 1st, and we'll end up with a projection to November 8th. But right now, on November 1st, the purple line is where you're at. A year ago, you were up here. The red line indicates we were improving. This dotted red line, dashed red line, is the best week we ever had. The blue line down here is the worst. You read the shaded red and the shaded blue by where the current data point leaves the x-axis. So it's leaving the x-axis right here. So you're somewhere around 40%. So you would be in a balanced marketplace. I consider a balanced marketplace to be from 33 to 50%. With that, we'll go into the movie. You had a little bit of improvement here, a little bit of improvement above that, which is why the red line's up there. Another improvement. Now, I think that's a huge step up. You can see you jump from here up to there. Another improvement. And now you've actually come down just a little bit, but I added in the plateau. And now you came down a lot. So I'm saying you're in a cooling marketplace. Jump down to here. So that's the worst line on the graph now. Another big jump down. So you can see how quickly the market came down. Now we're starting to take smaller steps. You can see, and the further you get, the closer you get to the dotted line down here, the harder it is to move. So you can see they're getting smaller and smaller steps. And now I'm saying that's small enough step that you're basically at a plateau. And at this point, all those solid lines are going to come on top. Right there, you saw that one pop up there. So the top end did a little bit worse. That one's down there too. And that one's down there. So the purple's a little bit higher on the high end. Now it came up a little bit up here. Frankly, when you're looking at the extremes to see a difference in the data, it's the same, which is why I'm calling it a plateau. And now we're jumped out to the 8th of November, and you can't see that line. So it's basically really no change. Now you're looking at the frequency of overbidding. This is the sellers that got more than their asking price, and you can see that's quite a bit below 50%, and in fact, it's getting close to 40, somewhere around 42%. This is the sellers that got below their asking price. It's approaching 50%. I'd almost call it 48%, 10% down here getting their asking price. 42 plus 48 would be 90, plus 10 would be 100. So that's exactly what it is. You can see the frequency of overbidding was really high earlier this year, and since the pandemic. Normally you'd be somewhere right around 45% getting more, 45% getting less, 10% getting right at their asking price, which is why the median list price to sale price ratio is often right at 100%. Now you're looking at the sellers getting less in the orange, which is why it's bolded. And then finally down here looking at the gray line, which is the sellers getting exactly their asking price. Here's the frequency of overbidding for each county. You can noteworthy is Contra Costa County is just going off the end of the scale here, falling down, which is actually pretty unusual. And I would expect it's on a plateau at some point, unless sellers are just resistant to lowering their asking price in that county for some reason. And the only time they sell is by taking less. You can see the other three counties are basically at a plateau, but at different levels. And again, because this is county specific data, it's only through October 29th. This is the frequency of overbidding. This is where I subtract off the county individual median. So you can see that Contra Costa County is actually behaving, despite its magnitude dropping down so dramatically, it's behaving essentially the way you'd expect it to behave, which is sort of interesting that it behaves so differently than the other three counties, which is part of the reason I've toyed with the idea of dropping off Contra Costa County and just looking at Alameda County, San Mateo County, and Santa Clara County. Here's the sold price that we saw earlier, and we've already talked about it, but it's up here. And again, it's for county data individually, so it's only through October 29th. This is what I think is the real story, and it's sort of a complicated slide, but this is the number of offers accepted in the past 5 weeks, single family homes only, and you're at 609. The worst year we ever had was 528 back in 2007. It's the current year, 2022, is the 24th worst year out of the last 25. So the only year that did worse is the year listed here. So 4 weeks right here, right around June 2022 was worse than any year we've had in the past. And you can see the magnitude, it wasn't that much. Well, 752, you'd have to go back and look at probably 2007 and 2008 to look at them, and they're not on the slide. So you can see the drop off is pretty significant, but it's also noteworthy that the number of offers has been dropping long term. And that's why I also did this 10-year average here. So out of the last 10 years, we're currently at the worst. And it was a pretty dramatic change because basically since May on, you've either had the 9th or 10th worst year, and you just go back to March, back to January, and you were having the second best year, second only to 2021 with the pent-up demand from COVID lockdown. Now we're shifting to what I call blended data. This is going to be single family homes, condos, and townhouses, San Mateo County, Santa Clara County only in a blender for a 5-week period of time. Here's looking at the DUI over time. The redder the numbers over here on the left, the hotter the marketplace. So you can see it cooled down and sort of got to the whitest somewhere in this time frame. And then you can see it got red again, and then it got whiter again. And now it's starting to actually look like it's getting redder again. There's a little bit more blue, especially here in Saratoga, Las Gatos, but it also is getting a little bit whiter. It does look like I failed to bring over the condo data. This is my heat map of single family homes. This is the saturated blue right now in the expensive areas of San Mateo County. Also note, in Santa Clara County, a fair number of the micromarket areas are in a hot marketplace. So even though we're not having any sales, the sales that happen are happening quickly. South County is slow at 67, Los Altos, Palo Alto is slow at 67, but the heart of Santa Clara County is basically under 30 days of unsold inventory for the most part. And that's pretty amazing, or at least under 35. Here's the magnitude of overbidding. You can see some paleness. You can also see some red in Cupertino, Sunnyvale at 103.2%. San Mateo County North is also at 102%. It's pretty hard to see that, the San Mateo County North shading here, and it's even hard to see it right here, but I can see the square of color there. Here's the frequency of overbidding. Again, there's a little bit more blue, which means sellers are getting less than 33% of the sellers are getting less than their asking price, and you can see that's mostly in San Mateo County. So San Mateo County is clearly doing worse than Santa Clara. Here, color has nothing to do with the speed or health of the marketplace. It's simply the price. The median price is for Redwood City at $2 million. You can see that several of the San Mateo areas, median is very close to $2 million. If you're below the median, you turn blue. If you're above the median, you turn red. So it's simply what the price range is. The number to the left is the cheapest 10 percentile that you'd find in the area. The number to the right is the most expensive 10 percentile. And the middle number in the middle is the median or 50 percentile. Here's the summary of your conditions: DUI, magnitude of overbidding, frequency of overbidding, sold price. And look at your geographic geographical area and see the market conditions, or you can come over to the right here and look at your price range and see what conditions you expect. Moving on to the breakdown, Santa Clara County actually has a shortage of single-family homes. Last week we were at 72%. This week we're at 76%. San Mateo County has a surplus at 133%. Santa Clara condos are pretty balanced at 108%. DUI 40 to 80 is balanced. Santa Clara County is at 45, pretty balanced, now 46. San Mateo County is at 61, so that's a pretty dramatic change. Santa Clara condos at 47, Bay City condos at 81. Magnitude overbidding, very close to 100% up and down the board. Frequency of overbidding ranging from a low of 31% to a high of 44%. You can see the comparison to last week. The appreciation that we're currently experiencing over the entire calendar year of 2022. This was the peak appreciation in 2022, the peak appreciation in 2021. You can see we're below the peaks of 2021, you can see that we clearly got up to 43% appreciation and you're now down to 16%. If you bought at the peak, unfortunately, you have lost a lot of paper money at this point in time. Here's looking at October data. This is a direct apples and apples comparison because you do get the data on 5th. So basically, you look at whatever numbers are important for you up here and you compare it to the previous 20 years and see what's going on. Your median price asking is basically where it's been for the last 3 years. Your square footage, your typical house. So the real takeaway is DUI is currently at 46. If you look, it's much slower than it has been the last 2 years, about the same as what it was back in 2018 and 2019, slower than it was in the teens, and about the same magnitude that it was 2000 even through 2011, same order of magnitude, but you can see here 225 days, 147. So the market does get a whole lot slower. We're only at 46. The real takeaway to me is the volume of offers. So let's look at that. That's here in the red. You're at 654. The lowest number I am seeing on the screen is all the way at 918 here in 2018. So you can see it's the volume of buyers that has just fallen off the scale. Now, 250 may not sound like a lot, but that's huge. That's 25% of your buyers going bye-bye. An industry, that means 25% of your title companies aren't going to have a job, 25% of your termite inspectors, 25% of your home inspectors, 25% of your real estate agents, because if you don't have the volume, you don't need the agents. Now, granted, everyone's going to take a little bit of a hit, but there is going to be essentially layoffs in the industry. Now, a lot of us are independent contractors in the real estate industry. Your title industry will probably have a few layoffs. Your lenders will have layoffs. A 25% reduction is pretty significant. The square footage and bedrooms, bathrooms here to get an idea of what the typical home is. And then you look at the magnitude of overbidding, the frequency of overbidding, and the median price range and the total price range. And with that, this is what you get if you join on early, ignore the date, and I'll be on at 9 o'clock. Again, we went over the URLs. The green is my root URL. You add 2022 to join Saturday Morning Live. Add in handout 2022 11:05 to get the handout, and it is posted to get a specific episode. To reach out with me with any questions, feedbacks, it's at the bottom of every slide. And again, with that, I'll pause and see if anybody's got any questions for me. Not seeing anyone unmute themselves. Everybody have a great week. Take care.